when it comes to money.
Okay, thank you for that question. So you are asking how to save money on a 100K salary, right?
Yeah, yeah, yeah.
Okay. So the number one thing that you need to understand is, first of all, you have to be very disciplined with savings. All right. So you have to set a clear goal. You understand? Decide what you are saving for. You get? Decide what you are spending, how you are going to spend it. Just make it, let the Bible say, write the vision down. Make it what? Make it plain. You understand? Write the vision. He did not say say the vision. No, he said write the vision down. Make it plain. So, do you want to get a house? Do you want to get a car? You want to get a clothes? You want to get whatever it is that you want to get? Let it be a definite goal. You get? Then your emergency funds, your investments, your retirement, whatever it is that you are saving for, just let it be definite. You understand? Then after that, there is something I call the golden rule of saving, or the golden rule of wealth building. You can put it that way. There is 50, 30, 20 rule. You understand? 50, 30, 20 rule. So 50% of that 100K will go into your expenses. So these expenses are more like your needs, things that you can't do without, right? Things that you cannot do without. You cannot do without living under a shelter. You can't do without your food. You can't do without your light, your gas bill for people who are in developing countries or developed countries. Your gas bill, your internet, your lights, your waste, this thing being um, fees and all those things, right? So your 50% of that 100K goes into your rent, utilities, food, transport, insurance. Just you can share it like that. Then 30% goes into a little bit of fun, and just you having a little bit of easing here and there, because our brain is being positioned in a way that once you give it a reward, you understand, once there is a reward for whatever it is that is striving for, it gets to strive harder. That's the way the human brain is being programmed. So it is good that even if it's $1, even if it's $2, you know just allocate to that. So your 30% goes to your wants, all right, while 20% goes to savings and investment. So 20% is more like you paying yourself, and then using 50% to do your needs, your utilities, and all that. Then 30% goes into a little bit of travel, a little bit of shopping, eating out, and you know, lifestyle. You get 30%. Then you now have to, for you to achieve this, you need to have automatic saving. Automatic saving that once the 100K comes into your account, 20% is already out. You understand? You have a fixed amount of percentage that goes out automatically from your account. So you can apply that with most of these savings apps right now. Piggyverse is good. You can use Piggyverse. At the end of the month, you automate it once your salary comes in, or once your paycheck comes in, or once this so amount of money comes in. You do what? You take it out. All right. Then, if the 100K is not enough for most of the things, you either level up your skill, or cut down your lifestyle expenditure and all that. You cut down your lifestyle inflation. You understand? You make sure that you don't you don't upgrade your expenses. You don't eat out too much. You don't make unnecessary, like, impulse buying. In economics, we call it impulse buying. You don't do all those things. You understand? Now, a lot of people at your level or will be seeing you as somebody that is stupid. But let me tell you something. It is what we do now that will determine whether in the next 20 years, in the next 30 years, in fact, when you are at 50, you will be playing golf over draft. Rich people don't play draft. Rich people play golf. So it is as a result of accumulated habits, accumulated investment, savings, things that you have done while you are actively working that will now determine the type of life you are going to live as a retired worker or a retired business owner. All right. So the 100K, just apply the 50 for your utilities, your food, your rent, your transportation to your workplace and all that. Then 30% to lifestyle, to traveling, to just eating out, having a little bit of fun here and there, and 20% for savings. And you need to know that you are not just saving to save, you are saving to invest. I hope I answered the question.
Yes, sir. Thank you so
Okay.
much.
Okay. Any other question before we go ahead? All right. Last week, we are discussing the US economy. How many of us took trades last week? Godson, did you take any trade last week?
No, no, no. I didn't take a trade. I was just trying to observe the chart.
Okay. So the observations and things that you observed, did you see the analysis that we did last week playing out?
I didn't. I think I didn't really follow the analysis. I was just trying to study the I think GU and GJ. They were almost behaving alike.
Okay. Yeah,
Movement
GU
of
and GA, right?
uh,
Say GU and GJ. Is it
yes,
G or GJ?
GU and GJ.
Okay, okay, okay. I thought you said GJ. G. All
Mimi,
right.
Mimi,
Okay, so we were.
Mimi, Mimi, go. Yeah, I'm done. I don't finish. Go.
We were discussing about the US economy. Last week, we had the PPI, which I told us, okay, you're welcome to this analysis. This is the second part. You're welcome to this analysis, and we kind of project to what is going to be happening the following week and how we can position ourselves to make money from the market. All right. So last week I told us that we had several news that was coming out, and those news have a way of affecting the Federal Reserve Funds rate for this coming week, which we are in. We had the PPI, we had the CPI, we had unemployment claims, and then the consumer sentiment. All right. So you see that all these negative numbers came out just as we predicted, because I was telling you that right now the US economy is weak. There is a lot of economic turmoil, and they need to reset the market. There is a way that they need to do what to reset. They just need to start from the beginning. All right. They have to make um, things a little bit easier for the consumers, for the citizens. All right. The citizens are the consumers. So we talked about PPI, which I told you is the producers price index. Producers price index is people who are into factories, people who are into production. All right. Factories, those who produce cars, produce clothes, textiles, and all that. So we talked about the producers price index and how it affects the market. We also talked about consumer price index. Consumer price index, talking about whether people are spending, the confidence that people have in the economy. You understand? This data is being gotten, and we now use it to say, okay, we have a good economy, all right, or we don't have a good economy. Then unemployment claims. How many people are unemployed in the US? Because we are basically analyzing the dollar. Why? Because dollar has um, major major volume, or let's say globally majority of the countries are pegged to US dollar. You understand? And then what we are trading, right? We are trading GBP USD, GBP JPY, Euro USD, USD JPY, USD shelf, gold. All these asset classes are pegged to the US economy and what happens around the US economy. All right. So at the end of the day, um, unemployment claims. All right. Unemployment claims. How many people were unemployed over the last month, over the last week? All right. Over the previous week, how many people claimed unemployed? Unemployment claims comes out every week. All right. Then we now have our consumer sentiment. So this week we are going to be talking about the retail sales. All right. So retail sales accounts for consumer spending. Retail. There is wholesale. There is retail. Retail is just you going to the market to buy your biscuits, to buy your car, to buy your clothes from all those retail shops, right? You go to the market to buy some certain things. So retail sales accounts retail sales accounts for consumer spending the previous month. All right, because you see this M/M. M/M means month over month. All right, M/M means month over month. So the core retail sales is accounting for consumer spending the previous month. So if the actual of this news is higher than the forecast, because economists are forecasting 0.4%. You understand? The previous was at 0.3%. So we are expecting 0.1% increase. So if the actual is actually greater than this 0.4%, it means that the economy is doing well. Right? The economy is doing well. But if it remains unchanged, that is, we still have 0.3%. It means that the economy is not moving forward, neither is it going backwards. The economy is just there. Right? The economy is just there. So we have the retail sales. Then we have FOMC meeting on Wednesday, which has to do with interest rates, whether they are going to increase interest rates or reduce interest rates. Speculations and everything economists are projecting is that we are going to have a 25%, 0.25% decrease in the interest rate. They are going to lower the interest rate by 25 bps. All right, they are going to lower it by 25 bps, while other economies are saying it's going to be 50, because from the data that have been gotten from January till this period of time, the US economy is actually weaker than it is being thought. All right, it is weaker than perceived. So we are going to have the economic funds rate on we are going to have federal funds rate on Wednesday, and then Thursday we are going to have unemployment claims. So this is when we are going to be seeing enough liquidity in the market. All right. So technically, we know from for the past months, DXY have been what? Have been bearish. So I am still super bearish on DXY. We look at this swing low. This swing low. I'm looking at this swing low. Here we had our break of structure. We had our BOS here, and you know, I told us that immediately you have a BOS after you have a break of structure. After you have a break of structural low, the next thing to anticipate is a retracement, not a reversal. That is what we don't understand. Not a reversal, it is a retracement. There's a difference between retracement and reversal. Reversal is when you have your market structure shift happening entirely. So that is a change of direction. All right. So the ultimate direction that we are having right now from the weekly is what? Bearish. So it means that whatever sentiment that you have on dollar, should be what? Should be bearish. You want to be going where the masses are going. You don't want to go where the masses are not going, because just you alone cannot. You don't have the liquidity to turn this market. All right. You don't have the liquidity to turn this market. When it comes to economies, you are the micro. The masses are the macro. So on the macro structure, on the macro level of the DXY, we are bearish. And you see that we have many bearish candles. You know, we have all these massive bearish candles engulfing the bullish candles. All right. So I'm still anticipating that this level, this 96.3 level, will be tested. So if we look further, we'll see that we have liquidity levels below that low. We have here, we also have here, and we have other blocks too at those levels. So we have these liquidity areas that needs down to where? Down to this structural low. So right now, let me see whether we are at discount level. Okay, we already at a discount zone, and we are at a premium level of that discount zone. So we still need to tap in lower. All right, we need to tap in lower. Our sentiments can only change whenever we have our sentiment long term can only change when we have this high being taken out. Right? When we have this high being taken out, that is when we can now change our sentiment from what? From bearish to bullish, because this is a major structural high. Going to the daily time frame, what has the daily time frame been doing? You see, we are just breaking all the lows. See, we are taking out the lows, We are taking out all the lows. We are taking out all the lows. So I am anticipating further downward movement. I'm anticipating further downward movement. All right, I'm anticipating further downward movement on the DXY. Now, even if you look here, you can see that going into details, you see that we have this dynamic resistance here. The market tapped into this zone and rejected, closing below this other daily candle. All right, and this one didn't take liquidity here. It's just an inside day. So I'm anticipating that we are going to take out this low this coming week. And then because of the news that is the series of news that is going to come out, I'm anticipating that by Tuesday, Wednesday, and Thursday, we are going to have a good runner on DXY to the bearish side. We're going to have a good runner of DXY to the downside because you see they have already taken out this fair value gap here. This fair value gap here has already been closed below with the price have closed below it. Price have closed below it, and now it is serving as a resistant level, right? It is serving as a resistant level right now. This is what we call inverse fair value gap. This fair value gap is now inverse because the market have closed below it, and now it is serving as a resistance, no longer a support, or no demand for this market. So it's serving as a resistance. So I'm anticipating that the market will drop further. Now, if you look at H4, you see that we have structure wise, we are having series of lower highs. We are having series of lower highs. We are having series of lower highs on H4. All right. So here, what do we have? We have a structure shift here. This was a liquidity grab. This was a liquidity grab into a higher time frame PDRA. So this higher time frame PDRA, after we tapped into it, what did we do? We broke structure. All right, breaking that structure, there was a little what? A retest. So that retest, we are going to have a meltdown. The structure is very, very obvious. Why? Because you see that all these lows, they are being broken. Remember what I told you guys about protected highs and protected lows. Protected highs, we are in a bearish market. Protected lows, we are in a bullish market. So these lows are weak and the highs are strong. So it is just very clear that what's happening here, the market is bearish. You know, the lows are weak. So because the lows are weak, we are anticipating more downside until we have a shift to the upside. That's just it. You know, you have to make your trading as simple as it can be. All right. Now, if you look here also, you see something. We have momentum. All right. We have momentum. So what's the momentum? We have this candle. We have this one single bullish candle. We have this one single bullish candle. So that's to tell you that there are a lot of sellers within this zone. I hope you're following. There is a lot of sellers within this zone. Because of this displacement candle that we are seeing here, there is a lot of sell orders. A lot of sell orders at this zone. And if you look here, you see that the candles will pull into that zone and reject. Will pull into that zone and reject. So the market is picking a lot of sell orders at this zone and is rejecting it. So that's to tell you what? That there is a lot of volume for sell on this particular level. On this particular level. So I'm anticipating that we are going to have that. If you have question, you can still put it on the chat box so that I'll attend to it while we are doing our analysis. All right. So now that we have a bias on dollar, let's go to let's analyze GBP USD. GBP USD. So what is happening on GU? What is happening on GU? You see that on the weekly, we are looking at what? Structure. Now, for those of us who are my students, I am on tomorrow we are going to be discussing about what I came up with during the week when I was studying. All right, I come up with a concept that we can actually use that will help us to analyze more. I call it workflow. Right, the workflow. So the workflow helps you to peek into the details of the market. All right, so we are going to talk how you can be able to achieve that. You talk about the momentum, you talk about the volume, you talk about the hierarchy of the market, you talk about we talk about correlating high time frame to lower time frame, correlating the higher time frame structure to lower time frame structure. We'll talk about candle analysis, we talk about PDRAs, that's just the workflow, right? So we are going to go in depth into that, and it will help you when you come to the market. You will not, there is this psychological disease that a lot of traders have, including me. Time to time it happens. You just stay on your phone, you see one opportunity, something that looks like an opportunity. Before you know it, because you can access the market, at the click of a button. You just enter buy or sell, pam. But with this workflow, you understand that you have to go from stage 1 to stage 2 to stage 3 to stage 4 to stage 5 before you even get to entry. And if you are somebody that is disciplined enough and you want to make money in this industry, that is what you have to follow. All right, that is what you have to follow. So GBP USD, what happened on GU? We had liquidity grab here. So after that liquidity grab, what do we have? We had the market structure shift. So after the market structure shift, we now started having, this is a low, then we had another higher low, another higher low, another higher low that was used as what? Guys, you guys remember our last week analysis section where I was analyzing Bitcoin? I told you guys about something on reset. Did you remember? I talked about resets. Did you remember? Did you remember when I talked about resets? If you remember, just type a 1 on the chat box. Awesome. Awesome. Chibese, if you didn't remember it now, I for query you. I for ask you why you don't remember. Because you are the one that asked that question and I talked about it. So you see that we had this low, we had this higher low. We had this higher low, we had this higher low, but what did the market do? The market came all the way, all right, all the way to this low, taking out this low. Now, after the market took out this low, what did we have? We had another shift here. So what does it tell you? What does it imply? It means that the market has done a reset. So I told you that after 3 major push, that will usually have a reset. If you can remember, we had 1, 2, 3. All right, this is the origin. Now we had 1, 2, 3, or you can say 1, 2, and 3. So this low right here was used as a liquidity grab. So after the liquidity grab, so many people will be thinking, okay, because the market have done what, taking liquidity from here, we have this market structure shift, so the market will be going down, forgetting that resets do happen. When we had that reset, we had this market structure shift. Now, look, what do we have? We had the market coming back into this PDRA. The market came back into that PDRA. And what did he do? He used that to distribute liquidity to external range. All right? Remember, I told you internal liquidity to external liquidity is always internal liquidity to external liquidity and external liquidity to internal liquidity. All right? So having our bias on DXY, it means that GU will be bullish. Okay, the sentiment on GU will be what? Bullish. So you see, we took out this high. After taking out this high, we closed above it, went a little bit higher. The market closed above it, went a little bit higher, and came back for an internal range PDRA. So you see that at this point, we had liquidity that was being grabbed here. Now this is still the weekly. This is still the weekly level. This is still the weekly level. So as they grabbed that liquidity, taking out this previous week low, closing above it, they bought, came back to that zone again where we now have this fair value gap. What did the market do? Rejected. The following candle that came didn't take out any liquidity. Why? Because we already had this liquidity that was being taken, this internal range liquidity that was being taken here, and then they closed bullish. All right, another indication, you see that we took liquidity here. So grabbing liquidity here, we had a market structure shift. This is me now using just candles to do analysis. Right? So we had a market structure shift. How did I know that this is a market structure shift? Because we closed above this previous high. All right? We closed above this previous high. And closing above this previous high, it means that this week that we are entering now, you should be what? You should be bullish. Now, where would you be targeting? Previous day high. Sorry, previous week high. That's where you'll be targeting. You see all these highs. All these highs will be your target. Let's go to the daily to see what the daily did. So on the daily, we had this low that was being taken out, tapping into this internal range liquidity here. It was used as a demand level, right? It was used as a demand level. So when we tapped into it, we took out internal range liquidity here. We also took out liquidity here. We also grabbed liquidity here, because you know that at every fair value gap, at every imbalance, there is always liquidity, there is always orders. What is liquidity? Liquidity is just money. You understand? There is always money to grab. There is money to take from the uninformed, the impatient. There is always money to take in the market. And for the market to move, it needs that fuel. Those who are in my class, those who are in my mentorship, you understand when I say it needs the fuel. You understand? The market needs that fuel to do what? To move. So we had this zone that was taken out. We also had this zone that was rebalanced. So rebalancing, we now had that market structure. So I'm anticipating that the market would also do what? Come into this level the following week. This is the daily candle. This is the daily candle. So I'm anticipating that we'll have this bearish and then a shift, then we'll go to the upside, which is these highs as our targets. We'll have these highs as our draw on liquidity. We'll have these highs as our draw on liquidity. So there's every possibility that we can still have this low being taken out. Then tap into this zone, and you see in that area we still have imbalance. We still have imbalance on H4. See the imbalance on H4. So we can have this, then market structure shift, then we head on to the top side. So I'm bullish on GBP USD. For the next one, let's look at what pair do you want me to analyze? Type it on the chat box. UJ, I'm analyzing UJ now. We are analyzing UJ now. All right. UJ, what do we have here? Okay, we took out liquidity here. I can see that we broke market structure shift here. So it means that this high is what? This high is protected. So after we gave a BOS at this level, we broke that structure. The market did what? The market started retracing. All right. So when the market retraced into a what? Into a premium level. When the market retraced into a premium level, the market started selling. All right. This is the premium. The market did what? The market started selling, and then we had a break of structure here. All right. That market structure shift was our indication, or is our indication, that the market is doing what? Selling. Now, major highs. We have this high. We have this. We have this high too. We have this low. We have this high. We have this low. We have this low. So right now, what I'm seeing on USD JPY is that the market is just ranging, right? The market is ranging. from the weekly time frame, you can even see itself. See from this low here to this high, the market is just ranging. The market is just ranging. But we are inside this leg, this high here, to this low. So we have this range. All right, we have this range. So going to the daily time frame, what can we see? The daily time frame is bullish. Market on the daily time frame is bullish. Why did I say it's bullish? We have this low, and then we have this high. So for USD JPY, you can see that for the past, since August 4th, this how many days now? This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 20. For the past 20 days, for the past 25 days, the market have been ranging. You understand? So it means that people who are buying from this level and those who are selling from this level, they'll be making money. You don't want to buy at the middle of this range. No. You want to buy from this low, this level, and you want to sell from this level. Why? Because the market is ranging. There is no clear market structure on USD JPY. There is no clear market structure on USD JPY. So you cannot say it is bullish, neither can you say it is bearish. I hope that makes sense. Let's look at which other pair. GJ. All right, I'm on GJ. So we can see that from the weekly time frame, of GJ, we had this liquidity grab here, and we had this structure shift to the upside. What else do we do? What else do we have? When the market came into this zone, because this market is what? Bearish, it didn't give us another lower low. Rather, it took out this lower high. Took out that lower high. So it means that the sentiment is bullish. That's why the market came to this discount level and bought. All right. So they also grabbed liquidity here and broke structure here. So that's to tell you that GBP JPY is bullish. I don't know if you guys remember, there was, when we were doing this analysis, the market came to this zone. I told you guys that the market is going to buy. I don't know if you remember that analysis. It's just that it's very unfortunate that we've not been documenting our analysis and going back to them and all that. But by the grace of God, we are going to be doing that. In fact, this analysis is going to be up on YouTube possibly by the end of tomorrow. It's going to be up on YouTube by the end, so that you can go back, watch the analysis, reference back to it, and all that. So I was telling us that we are at a discount level, a demand level that GJ is going to buy, and there were economical events that was happening within this period of time that supported the bullish sentiment on GBP JPY. So, and since then it have been buying, right? So GBP JPY right now is currently bullish on the weekly time frame, and now we have an imbalance here, and that imbalance is volume imbalance, right? That imbalance is the volume imbalance on GJ. So there's every tendency that they can have some manipulative retracements within that zone before we continue higher. You can see on the daily time frame, what do we have? We have another reset. These things are just very beautiful to spot. We did what? We have another reset. So this market is bullish. So we have a PDRA here that have not been tested, that is serving as a draw on liquidity for GJ. So this market is serving as a draw on liquidity for GJ. So we are anticipating that GJ is going to do what? Go to the upside, all right, on the daily time frame. So let's see for H4 and see if we can still see something interesting. On GJH4, we took liquidity, market structure shifts. Now started having what? BOS, break of structure to the upside. BOS retracement, BOS retracement. So we are anticipating that as we have this break of these highs, there should be a retracement to the downside to continue higher. To continue higher. So look for a retracement to OTE levels. I know my community members have not taught you guys OTE, but we are going to be doing that very soon. So a retracement to OTE levels and then a push to the upside is what I'll be anticipating on GBP JPY. So keep your eyes out on GBP JPY for that retracement. All right, let's go to our Oga Patapata of them or gold. So I hope you guys understood the analysis that we have done on GU, UJ, and GJ so far. Type a 1 if you understand. Type a 2 if you don't. Precious, are you with us? Did you understand the analysis? Okay, so gold. All right. Precious understood. So previous week on gold, you guys remember when I was telling you that gold will take out this high, and this high. You guys remember when I told us that analysis, when we are doing all these analysis. So right now, gold did what? Gold closed previous week bullish. But now we have this level as a point of interest on the weekly time frame. We have that level as a point of interest. And then on the daily time frame, what can we see on the daily time frame? We have this other block on the daily time frame. And also we have this fair value gap here. We have that imbalance. So there's every tendency that we would have a little pullback before we continue bullish, because I am super bullish on gold. I'm super bullish on gold because we have a negative economic sentiment that is coming from the US. It means that a lot of investors are going to pull out their money from the US economy so that their money will not lose value. They will put it on gold. And if gold is very, very appreciable this period of time, very, very attractive this period of time, a lot of investors are going to invest in gold. All right. So on the 4-hour time frame, we have this fair value gap here. And we'll have that other block. We'll have this fair value gap here. So right now, these are point of interest where I am anticipating that gold will come to before we push to the upside. All right. I'm anticipating that gold will come to this zone before we push to the upside. I want to see gold taking out this low, using it as liquidity, and then we'll use this as we use that level as what, as our discount level to push upwards. So I'm anticipating that gold will take this out as liquidity, then we continue higher. Any questions so far? Any questions so far? All right, that's a wrap. Thank you guys for joining. Thank you for being a part of this class. I'm hopeful to see you on Sunday. Please, the psychological aspects, the fundamental aspect, the technical aspect that we have talked about today, make sure you put it into practice, because it is practice that will make you to be perfect. Practicing that will make you to be perfect. When you hear all these things and you put it into practice, that is what will give you a result. And that is what will give you the confidence, the trust in yourself to do what? To execute what you have learned. It's of no use that you spend your data, you come here, listen and listen. At the end of the day, you are not executing. It's of no use. All right. So you need to see return on investment on this class that you are coming on, this course that you are that you've bought, on whatever it is. You need to see return on investment. So execute, make sure you study, make sure you go through what have been taught, make sure you execute, and then you'll see the maximum results that you are looking for. So the book for this period of time till, let's say, the next 2 months is Atomic Habits. I'll post it on those who are my this thing. I'll post it on the group. I'll post the book on the group. Atomic Habits. You get Atomic Habits. So the book, I'm currently reading it right now for the second time. I'm reading it for the second time. So it has a lot to do with the little habits that you put up that compounds to, form a habit for you. The little things that compounds to form a habit for you. So I'll be posting that on the group, and either the Telegram group or the Discord, possibly the Discord. It will be for the inner circle, and we'll be reviewing it. Okay. Thank you very much. If you have people to recommend for this Sunday School of Money, try and recommend them. I'll see you guys on the next one.